XRP is moving, but not in a way most people are noticing. While the headlines have been dominated by Bitcoin volatility and Ethereum ETF drama, XRP has quietly held its ground. Price-wise, it's sitting just above $2.19. But what's happening behind the scenes is what really matters right now. And it's something seasoned crypto investors are watching very closely. On-chain data shows that several large XRP whale wallets, some dormant for months, are suddenly active again. These wallets are scooping up huge amounts of XRP, taking advantage of low volatility and low retail attention. These aren't people looking for short-term flips. These are deep-pocketed players positioning ahead of what they believe is a coming breakout. So, why now? One major reason is regulatory momentum. The prediction platform Polymarket, used by hedge funds and serious traders, now gives XRP an 88% chance of getting a US spot ETF by 2025. That's an enormous shift. A year ago, XRP was in survival mode during its battle with the SEC. Now it's being priced as a legitimate institutional asset with real-world utility and potential ETF approval. And let's not forget, XRP already won its partial victory in court. The SEC was told XRP is not a security in secondary market sales. That one ruling removed a huge amount of uncertainty. And that clarity is exactly what institutional investors needed to start looking again. But it doesn't stop there. Ripple is currently in advanced talks with multiple banks and financial firms across Asia, Japan, Singapore, South Korea. These are regions where Ripple already has existing partnerships. Now, they're reportedly expanding those deals into full-blown cross-border settlement pipelines using XRP. If finalized, these partnerships won't just be symbolic. They'll represent real global usage of XRP for liquidity, payments, and institutional transactions. Meanwhile, the UK has just made waves of its own. The Financial Conduct Authority, FCA, has announced it's considering allowing retail investors to access crypto ETNs, exchange-traded notes, again. These had been banned for years. If the FCA follows through, UK investors will once again be able to buy exposure to assets like XRP through regulated, retail-friendly investment products. That's a huge deal. It means retail demand can return in a regulated way. And if XRP ETFs or ETNs come to the UK, that opens the door for massive inflows. Elsewhere, we're seeing clear signs of continued institutional adoption. MicroStrategy just added more Bitcoin to its already massive holdings, now valued over $60 billion. Gemini has filed for a US IPO. And other large players like BlackRock and Fidelity continue pushing into crypto infrastructure. This all points to one thing. Crypto is maturing. It's no longer just about hype cycles and meme coins. It's about real utility, scalable infrastructure, and regulated access for institutions and the masses. And this is exactly why XRP is now back on the radar. Think about it. A global payment coin, legally cleared for secondary trading, gaining traction with banks, and now potentially being approved for an ETF in the US, an ETN in the UK. That's not a moonshot. That's a blueprint for long-term value. And yet, the price is still under $2.20. Most traders are ignoring it, still distracted by Bitcoin headlines or meme coin noise. But that's exactly how whales like it. They accumulate during silence. They position before the hype. And when the market finally wakes up, it's already too late. So, here's the takeaway. XRP is one of the most misunderstood coins in the top 10. But quietly, it's building momentum. Between regulatory clarity, banking partnerships, and global ETF access, XRP could soon have the perfect storm behind it. Don't wait for headlines to tell you what smart money already knows. Like and follow, and we'll see you at the top.